Today, we are going to see the 4 reasons why market is falling continuously. Also, what should we do? That means, what should be our strategy in falling markets? I am Nilesh Bodhi and you are watching Motivated Life Coach. The 4 reasons due to which market is affected is: first, foreign direct investment; second, global oil price hike; third, rising inflation; and fourth is the effects of war. Foreign direct investment inflows includes 3 things: equity inflows, reinvested earnings, and other capital. If we see the graph, we can see that the foreign direct investment in USD, that is billion US dollars, from 2012 is 46.56 and it's gradually increasing till financial year 2021, and it has reached 81.72 billion US dollars. Okay. FDI equity inflows contracted by 16% to USD 43.17 billion during April-December 2021 period, according to the data from Department of Promotion of Industry and Internal Trade, which is DPIIT. So you can see there is a decline to 43.17 USD. Now if you compare this with 2012, it is lesser than 2012, right? Okay. Second point, the inflows had stood at USD 51.47 billion during the corresponding period of the previous year. Third, the equity inflows in the third quarter of this fiscal, that is October to December 2021, declined to USD 12 billion as against USD 21.46 billion in the corresponding period of 2020. Fourth, the total FDI inflows fell to USD 17.94 billion during the third quarter as against USD 26.16 billion in the year ago period. So as we can see, due to the FDIs continuously declining, it has impacted the market a lot over a period of time, and till today it is still impacting. Second, global price hike. Now let us see few graphs. The first graph tells us the last 3 months and last 12 months prices. If you can see, the prices of one barrel has gone up from $60 a barrel to $120 a barrel today. So this is the hike basically, and the market is really impacted because of these oil prices. And because of these price hike, the sectors which are impacted are paints, tires, oil marketing companies, aviation sector, and cement sector majorly. In the paint side, okay, out of total raw material costs incurred by paint manufacturers, 50 to 60% of these costs accounts to crude and crude derivatives. In the tire side, that is in case of tires as well, crude and crude derivatives account for 50% of total raw material costs incurred by tire companies. In the oil marketing companies, high crude oil prices will be detrimental for oil marketing companies on a short term, as the companies will not be able to pass the inflationary crude oil price to its customers by hiking the diesel and petrol prices. This will in turn affect the profitability of this sector. Aviation sector, 40% of the raw material cost account for aviation turbine fuel in any aviation company. Since there is an increase in price of ATF also, there will be a direct impact on the company's profitability. Cement sector, crude products also have a decent application in cement industries. The rise in prices will not affect this sector to a greater extent, but will have an impact up to some level. Recovering demand in real estate sector and government push towards infrastructure development will aid sector's profitability amid inflationary raw material prices. The sudden spike in oil prices takes a toll on companies' operating profits and profit margins. This is the main reason for negative reaction to sector stocks by market participation. Hope you understood how the prices, the crude oil prices, are affecting the market. Inflation is the rise in price of goods and services in an economy over a certain period. Inflation raises the prices, lowering your purchasing power. The US inflation currently stands at 7.5%, whereas Indian inflation is at 6%. Currently, we are paying rupees 76 for $1. Effects of inflation: first, increased dollar value; second, increased interest rates in loans; third, decreasing real returns on savings; fourth, impacts the cost of living, impacts the cost of doing business, borrowing money, mortgages, corporate and government bond yields, and every other facet of the economy. If you take an example of rupees 1 lakh, if you have 1 lakh rupees in 2018, so the cost of 1 lakh will gradually decrease over a period of time with 8% inflation per year. In 2023, it would be 65,908. In 2028, it would be 43,439. And accordingly, till we go, reach 2053, the value of this 1 lakh would be just rupees 5,402. So that's how inflation affects our daily lives. That's how inflation basically raises the prices and lowers your purchasing power over a period of time, right? Okay. If we see the inflation for this the commodities basically which we are using in our day-to-day life, it can be your cereals, meat, fish, oils, fats, vegetables, and other things. Okay, so it is gradually going down. So the CPI was 6.01%, and the changing index in Jan 2000 is minus 0.3%. So that's how every commodity is getting impacted. Inflation raises prices and lowers the purchasing power. As simple as that. The fourth one is the effects of war. So how the war has effect on the economy. First, the war damages the infrastructure. Means there is a huge damage to the infrastructure. As we can see the pictures which are coming out from Russia-Ukraine war, we have seen huge damage done to the infrastructure. Second, decline in working population. It's very obvious that the working population will decline due to the effects of war. Third, rise in inflation. We have already seen how inflation affects our lives. Fourth, shortages of daily essentials like food, shelter and clothing. It is bound to happen. And there is uncertainty in the market due to this. Then the debt will definitely rise. Why? Because if we don't have money, we'll try to borrow more and more. And that's how there would be rise in debt. And the last is disruption to normal economic activity. Everything gets disturbed over a period of time due to effects of war. These are few stocks basically and their forecast till 18 March 2022. Now, remember, this is no recommendation to buy or sell from my side. This is purely for your education purpose and the prediction is based on the past data. You may please consult your financial analyst or use your own insights to buy, sell or hold these stocks. So the first stock is Suzlon, which the minimum price would be 8.0 and the maximum would be 10.2. So you can buy this. KPIT would be from 487 till 572. TCS would be in the range from 3311 till 3613. Happiest Minds would be 837 till 979. Infosys would be 1669 to 1736. Techem would be 1360 to 1446. Reliance would be 2282 to 2422. IRCTC would be 696 to 774. Zydus Cadila would be from 307 to 347. Sun Pharma would be in the range from 779 to 832. Urja Global would be from 10.7 to 17.1. Lloyd Steel from 8.1 to 13.9. First Source from 105 to 127 and Balkrishna Industries from 1400 till 767. Now remember, I have already bought few of these stocks with me and I am investing in these. But as I said, please consult your financial analyst or use your own insights to buy, sell or hold any stocks. This is no recommendation from me. This is only purely for educational purpose. Well, so we have seen the 4 reasons why market is falling and I hope you have understood it well. If you have got any questions on this, you can please write to me or comment on my YouTube channel and let me know and I'll get back to you as soon as possible. Note, stock market and mutual fund investment are subject to market risk. Please read all scheme related documents carefully and decide for yourself which stocks you'll be buying based on your own analysis. Past success does not guarantee future performance. If you want to invest in mutual funds, email us at bodhifacilities@gmail.com or contact us on 7349 701 701. Please fill in your data by clicking on the below link and we would be happy to send you free risk-based profile as soon as possible. Please don't forget to like, comment, share and subscribe to our YouTube channel. See you in the next video. Till then, take care.